And Seana is taking a look at what's trending in after hours. Seana.
All right, Inez, we've got a couple of stocks here for you. We have Credit Suisse, Adobe, and Five Below now all up on the board. Let's take a look at Credit Suisse first, because we're looking at gains of just about 7.5% in extended trading. Totally different picture than what we were looking at throughout the trading day. The reason why we're seeing this stock jump so much is because we got a headline in the final hour of trading that the Swiss National Bank will offer Credit Suisse liquidity backstop amid the plunge in shares, quote, if necessary. So that's helping reassure some of the jitters out there on the market, why we're seeing the stock up just about 7%. But you're looking at a 2-day chart here, and I pulled up the 2-day just so you could see the dramatic fall at the open. We closed well off the lows of the day, but Credit Suisse did hit a record intraday low during the trading day today, closing off just around 14%, the 2-day fall of about 15%. So some concern here after the Saudi National Bank said that, and that is the Credit Suisse's top shareholder, that they will not raise their stake in the banks. That led to some fears in the broader market. We certainly saw that reflected not only in Credit Suisse, but the European banks. Here in the U.S., a number of the larger U.S. banks are under pressure, as well as the regional banks pulling back into the red today. Let's take a look at Adobe. That stock out, or that company, I should say, out with earnings after the bell, and pretty decent earnings at that. You're looking at a pop of just about 4.5%. The company beating on both the top and bottom lines for its most recent quarter. Also, its full year profit forecast, that came in better than expected. Adobe CEO said that the company is raising its guidance based on, quote, tremendous market opportunity and consumer confidence in the company's execution here. Over the last 2 days, although that doesn't really tell the picture, let's take a look at the last 3 months. We're looking at Adobe barely in the green, up just about 1.5%. Over the last year, though, the software stock under a tremendous amount of pressure, as well as the broader sector here, off just about 21%. And rounding it out with Five Below, that stock off just about 4% in extended trading, falling short here, issuing a soft Q1 guidance. That's putting some pressure on shares. We certainly have seen consumers pulling back on their spending, favoring essentials. A name like Five Below clearly taking a hit as a result of that. Year to date, when you take a look at the performance of that name, still up just about 12% over the last year, up about 28%. So it has fared relatively well, but of course, as there's some concern about the broader economy, what that could mean to a name like Five Below, that is putting some pressure on earnings and on the guidance here going forward in us.
And Seana, the stock I'm watching for tomorrow is FedEx. The shipping giant is set to report its third quarter results after the market close on Thursday. Analysts are expecting the company to report earnings of $2.71 a share on revenue of $22.7 billion. Investors and analysts will be looking for updates on FedEx's cost-cutting plans. The company's shares have been beaten up over the last year, but so far have shown strength in 2023 of about 12% year to date.